It does make sense to be cautiously optimistic again. The main reason why we went from 126k down to 80k, that reason is a thing of the past. The long-term holders sold massively and they've stopped selling. That's what we see over here, the realized profit over time. Whenever the market is taking a lot of chips off the table, whenever Bitcoin moves from long-term holders to short-term holders, we tend to see a retracement. We've seen this when Bitcoin hit 72k. We saw this when Bitcoin hit 100k. And interestingly enough, once Bitcoin was at around 110k, the long-term holders sold quite consistently. But now that selling pressure is gone. And we want to buy when there is no selling pressure. This is when we had at least local bottoms. Have a look at the short-term holder cost basis. So that's the line in blue. We are going 1 standard deviation down for the line in turquoise. We are going 2 standard deviations up for the line in yellow and in red. And we are still below the short-term holder cost basis. So the average short-term holder still, after the slight recovery, is in losses. And since the long-term holders aren't selling anymore, there's a chance that the short-term holders buy up this bottom again, as they already did twice in 2025, right? The bottom over here and the bottom over here. Have a look at this Bitcoin price chart. We are in a rally since the end of 2022, but there's a different reason for the first part of the rally versus the second part of the rally. Something different happened along the line. Check out this chart here at the top. That's the stablecoin dominance. The stablecoin dominance measures how much of all of crypto is currently in stablecoins in percent. So when there's a lot of stablecoins, when there's a lot of capital on the sidelines, the market is very scared. There's a lot of dry powder on the side, and that dry powder could get deployed at some point. When it does get deployed, of course, crypto prices tend to go up. And that's exactly what happened at the beginning of this rally. From 16k to 40, maybe even 70k, we simply saw a lot of the stablecoins getting deployed again. The stablecoin dominance went from 16% to 5%. But since the beginning of 2024, something else is happening. The stablecoin dominance is just oscillating. That, of course, creates short-term tops in the price, right, when the market is fully deployed, and short-term bottoms in the price, when the market is rather risk-off and money is on the sidelines. Again, a lot of money is currently on the sidelines, and if that money gets deployed, that would of course indicate the Bitcoin price to go up from here. But have a look at those peaks. Whenever we were at these green levels, the market tended to be rather risk-off. And so let's compare the Bitcoin price from that very first peak to the current price. We increased by roughly 130%. So that's the growth of crypto independent of the medium-term mood swings of the market. 130% since the beginning of 2024. Now have a look at the stablecoin market cap since the beginning of 2024. It also grew by 130%. So basically there are two factors that move the market. There is the money that's flowing in from traditional finance into crypto, and there's the deployment within crypto. So the current investors, how much are they currently risk on versus risk off? And in general, how many people come from outside to deploy money into the system again? Since October of 2023, we see the stablecoin market cap increasing, and that of course helps crypto prices. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. The reason why we have to be cautiously optimistic and can't go full on bull mode yet is that the stablecoin market cap unfortunately has stopped growing at its prior rate. In the last 3 months, we aren't going up anymore as we used to. We barely saw any net inflows, just very, very little, 0.7% over 3 months. That's pretty much how quickly the monetary base in general expands. In other words, when we speculate now that crypto prices will bounce from here, we are basically hoping that the short-term holders will pick up the slack. We are hoping that they're going to buy the bottom yet again. And we are hoping that the money that's already in crypto will get deployed. We are not hoping for new inflows. That's rather unlikely. We're just hoping for a positive narrative that everybody that's currently so cautious starts to use their capital again. There have been times when we have been higher in the stablecoin dominance, right? Up to 16%. So there's also a potential bear case. That, of course, would be very problematic for the Bitcoin price and for crypto in general. Again, currently the short-term holders are in losses. This is the market value to realized value score, and it tends to hover between levels where profit is taken and levels where the short-term holders potentially consider to buy the bottom again. Maybe we are turning around. Let's all hope for that. Another reason to be cautiously optimistic is this here. This is Bitcoin with the historically two best moving averages. So the 44-day simple moving average, the line in orange, and the 125-day simple moving average, that's the line in turquoise. Those are the two moving averages that historically work the best. They both perform pretty well, but unfortunately currently they have contradicting signals. So the strategy is very straightforward. We buy whenever the price is above the moving average, and we sell or we bet on falling prices whenever we are below the moving average. The reason why I'm saying this is contradictory now is because the shorter term moving average says we should be buying, the longer term moving average says we should be selling. Here's the backtest result of all the moving averages I've tested for Bitcoin from the 2-day all the way to the 200. So this is the 44-day SMA, this is the 125-day SMA, this is the historical performance of the 44-day SMA, right? So Bitcoin's buying and holding chart is here in white, and the backtested chart is the line in turquoise. So that's 44-day, that's 125-day. Both approaches work, but unfortunately they do not give the same kind of signal. Now the 44-day tended to perform a bit better than the 125-day. Not by a lot, but still measurable. So again, we shouldn't be neutral, we should rather be cautiously optimistic. And that optimism can fade very, very quickly. The shorter term moving average is currently at 89,575 US dollars. There are some inflows into the ETFs again, but really the ETFs don't matter that much. What really matters is the long-term holders. And as we've already said, the long-term holders have stopped selling. They rather now accumulate a little bit. Not significant, but at least they're not dumping on the market anymore. And historically, when they dumped, we tended to see a top medium term in the price, and they've now stopped dumping. That's good. We also see how the perpetual futures market finally starts to come back again. We are very far away from the old heights after the October 10 flash crash, but the tendency is good. By the way, if you're interested in investing into that strategy, the 44-day simple moving average in Bitcoin, then feel free to check out the premium membership. A link to premium pops up here on the screen. I personally have quite a bit of money in that strategy as well. And the steps that are explained in premium automatically copy trade everything. So you don't have to look at the chart every single day. You just deploy your capital and then let that capital compound over time. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on premium. Cheers.